Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is June 20th edition of Market Outlook. Don't forget to sign up for this by going to www.marketgauge.com. You'll receive this text and video update every week for free. All right, so Greek drama still playing out. Probably the news after the weekend is going to be impacting the market, but let's see where we are. As you read and noted, the market seemed to basically be digesting an assortment of bad news climbing the proverbial wall of worry. So a couple things to note. Let's take a look at the S&P 500. As you can see, we basically came close to closing on a new all-time high. Intraday, we came within fractions of a percent of actually taking out the high, but by the close on Friday, we're back into the mid part of the trading range that's been established over the last several months. So we closed above the 50-day moving average, which is that blue line. Let's put that in. There you go. We're still above the 50-day, puts us firmly still in a bullish trend. Interesting to note, we actually had two what I call real accumulation days. Those days are increasing volume of the prior day, plus it's greater than the 50-day moving average of volume. So that is positive action, and this mild pullback here needs to play itself out. But overall, again, just in the middle of that range. Big divergence, though. The IWM that we've been following and looking for leadership from actually did reassert its leadership, and it's moving out from all of this basing action right here. So again, you can see IWM, mid cap to smaller cap stocks leading the rise. That is interesting action. Plus we have an inside day. So the confirmation of this move out of the inside day would do one of two things: confirm an upside move, and that would probably put us in gear for some time, or this move outside of the Bollinger Band, an inside day, and a breakdown would definitely put us back more into doldrum state. So you can look at IWM as a lead indicator on how it moves out over the next couple of days of that inside day. Let's take a look at some of the market internals. Okay, this red here is our Mcclellan Oscillator. As you can see, we got oversold and modest rise from that, and not huge amount of follow through. So when I talk about the overall breadth being rather mediocre, look at this overall trend since October of 2014 or early November. The breadth, even though we've gone out to new highs on a marginal basis, has not taken it out. Now, there are two ways to look at that. We can't seem to get any momentum going. The overall broad market is being led by a couple of big players, and the breadth is overall weak, or that this sideways to down sort of trending action as the market's moving up gives plenty of room for an upside move to be powered as more stocks gain strength. So the jury's still out there, but overall, again, you can see narrowing breadth on the market over the last 6 to 8 months. Now, on a shorter term basis, the 10-day advanced decline, 10-day up-down volume, you did get a bit of a move on the advanced decline from oversold readings just a week or so ago, although not really much in terms of up-down volume, because we didn't really come from a deeply oversold level. So at best, you can say this is marginally positive on the short term. Again, this minus 1,000 on the advanced decline indicates, again, overall weak participation. Let's take a look at sentiment. Volatility. We like to look at the ratio between 1 month and 3 month volatility on CBOE optionable stocks, and you can see basically our overbought range is over 1.2 to 1.25. That would indicate frothy settlement sentiment. Down here just under 1 would be overly bearish sentiment, which indicates a counter trend. It would move back up counter to the negative sentiment. But meanwhile, we're sort of stuck in the middle and bouncing off of what I would call what was deemed oversold over the last 3 to 6 months. So overall, again, rather neutral. But on an absolute basis, if you look at the VIX, we're trading at lows not seen in years. So sentiment is complacent on a longer term basis, but not so complacent that it's taken out the lows of the lower Bollinger Band, which would indicate extreme frothiness. So longer term sentiment moving along with the market, confirming that sort of grinding upward bias. However, the short-term sentiment not quite there to generate a negative reading. Taking a look at bonds, you can see on the daily charts, this is a daily chart here, we've got now this pretty well-established downtrending channel. We're not overbought nor oversold, but we did break into a bearish phase. Now that bearish phase on the daily chart where the 50 is under the 200 and the price is there too, has not been we have not had a bearish phase since 2013. However, we are bouncing above the 10-day moving average. Overall, it looks like at least the daily charts have broken down. Different story though, and again I want to reiterate this because the long-term trend in interest rates still lower. Interest rates lower because, as you can see, the 200 weekly moving average, this green line right here, is holding. Now we are trading beneath the 65 week, so that is an important intermediate term indicator on our longer term time frame. So the trend is definitely, the longer trend definitely under attack, but still there, with the daily chart showing that type of disintegration of the trend on the daily chart. So we'd like to see all of the different time frames, daily, weekly, monthly, moving in conjunction. So definitely under attack on the rates here, but longer trend still intact. Let's take a look at gold. Gold, you can see here on a weekly basis, just basing out, the trend still down, the 65-week moving average coming in at 119 or so. So what do we have here on the daily charts? A little bit of strength showing up here on the daily charts, and you can see we're sitting in between the 200 and the 50, and if we can get and power above there, that might tell us early indication that the long-term move that's been underway in gold from the highs at almost I guess 18 or 1900 in gold bullion might have run its course. So we definitely want to look at this inside day that occurred in gold, right under that 50-day moving average, and just the 200 and the 50-day here. So it's going to be interesting to see how that plays out as well. Now, as the breadth is narrowing, let's take a look at our triple play indicators, because you're going to be surprised at what we're picking up here and the narrowing breadth and how it's playing out in NASDAQ. First thing is, let's take a look at Apple. So the concept here is we're looking at sort of the alpha, which is determined by this red line. So this is the ratio between Apple and the S&P 500. As you can see, the moving average here has broken down. We're holding on an absolute basis this support level right here. So overall, you can see tremendous pressure on the bottom chart, which is looking at volume. So volume patterns obviously trending down, weakening in Apple as the price movement is also weakening against the S&P. Now looking at the chart here, you can see we're trading just under the 50-day moving average, putting it into a modest warning phase. So this is what we call the triple play. We're looking at basically the ratio of a particular instrument relative to a key index, and also looking at its volume patterns as well, whether it's under accumulation or distribution. Clearly, you can see Apple here on volume, in distribution. Price definitely weakening on a relative basis versus the S&P. Now let's take a look at Google, another big component of the NASDAQ 100. Similar type pattern. You can see the overall trend and the moving average just barely peaking above the 20-day moving average here. So that is what I would call so far a weak buy signal on the spread. Volume has not confirmed. It is not a buy signal yet. And as you can see, Google, one of the weaker stocks, trading under the 200-day moving average and closing basically right on the 50. So we can get some volume coming back into Google. That might, and a little bit further movement to the upside, that might reverse the trend, especially over the 200-day moving average. That would be interesting to see develop. That would be a good sign for the market overall. But so far, Apple and Google definitely under pressure at the moment. What's leading in NASDAQ? Amazon. As you can see, the Amazon, looking at the performance relative to the S&P, we've been looking pretty good right here. And again, the action over the last couple days, clear outperformer relative to the S&P 500, and volume patterns looking pretty good as well. And you can see the overall trend moving extremely well relative to the S&P 500. So Amazon still under accumulation with positive price action. Another stock to follow, EA, Electronic Arts. This stock under accumulation. Look at this here. You can see breaking out to new highs, excellent volume patterns, excellent price action as well. So as you can see, we certainly picked it up here on this triple play indicator, which is both the confirmation of price and volume. So looking pretty good here, and so there's a leader. Let's take a look at Tesla as well. And as you can see, price performance on Tesla relative to the S&P, excellent. This is an important stock to watch as well. We do have 2 inside days to the big breakout day, and they're both doji days. If we can get above the highs here of the last 3 days, that would really power probably another move, potentially powering it to new highs. And again, taking a look at the power play here, relative volume really kicked in here. So as you can see, the market, the price action definitely outperforming the S&P since April. And again, this is looking at it on sort of a 20-day rolling period. This is the moving average of the ratio. This is a moving average of the on-balance volume. And looking at so what we like to see is volume accumulation and excellent price action relative to the market. So those two combinations power very large and potentially parabolic moves. Okay, that's it for now. Hope this helps. Let's keep an eye on that IWM and the as a lead indicator there, and we've got a couple of stocks to watch. And also, if you want to know more about the power play indicators, there's some links here underneath the videos to the power play and how to use it, and a lot more information. Thanks. Bye for now. Stay frosty. Have a great week.